Roughly 18 months ago, we were looking out for a multi-year bull run in gold, and so far it's been delivering the goods. But how much higher can this go? Or are we getting very close to a top? We are going to take a look at that in this video. We're also going to discuss Bitcoin, which interestingly, in that same time period from December of 2023 to now, is still up by almost a factor of 2 compared to gold. So get comfortable, as we will be digging into some macro analysis and shorter term analysis as well for Bitcoin and some of the traditional markets too. Before we dive into all of that, as usual, please remember that I'm not a financial advisor, so always do your own due diligence and research, and past result and not indicative of future performance. Now, when it comes to gold, the setup which gave me confidence that it'd be going into a macro bull market, an explosive move, is quite simply the 4th time breakout. This is a signal I started sharing with you guys on YouTube many years ago now, pretty much since I got on YouTube, and it works on basically any time frame and any market. Now, the reason gold was so powerful is because this 4th time breakout took many years to actually form. The first high was in 2020, the next high in 2022, and the third high in 2023. But the thing I really love about this particular setup is that there is a bit of symmetry between the tops. So the way this signal works is that when the market approaches the same level for the 4th time, often it goes through and puts in a genuine move as opposed to a fake out. Now, the thing with gold is we did have a little bit of a hiccup before the market reaccumulated. It did hold previous highs and previous 50% levels, but it most certainly continued to break out and put in an explosive move, just showing the true power of this particular signal here. So if you're not yet following 4th time breakouts, I highly recommend you do a bit of work on them. Continue to watch this channel as I do show these signals play out time and time again. We did have a recent example of this in Bitcoin just the other day. We did see a 4th time breakout on the 1-bar swing chart. The swing chart makes it super easy to identify these signals, but as you can see here, we had 1, 2, 3 swings all around the same price, then a 4th time breakout, giving a very high confidence short trade in this case. It works in both directions as well. But just sticking to gold for the time being, we have seen a very explosive move, and there are still no signs of this bull run for gold stopping. Now, it doesn't mean it's just going to continue in a vertical fashion. Of course it could, but we will be seeing some rest periods. And where those rest periods end up are really important. How much of the gains do they give back? Does it reaccumulate at high ground above previous tops and above previous 50% levels? And if it does, you can just continue to expect further acceleration in the northward direction. If and when we see a breakdown of a major low and a major 50% level, then you can start to think about longer drawn out reversals for gold, and perhaps the bull market for gold has come to an end. But until that comes about, you just have to keep going with the trend, and the trend is still clearly up on multiple time frames on the TIA Gann swing indicator. There's a link for this in the description below, and I am currently referencing the TIA Gann swing pro. We have 7 indicators in the suite, so make sure you check that out if you haven't already. When it comes to gold, the trends are still up. We are still seeing the effects of this multi-year accumulation take place. So now we just have to let the market do its thing and see how long the market can run for. Markets in all-time high territories can move very quickly and to heights that most people don't think possible. There is now no background noise or background resistance to be taken into consideration. So people, broadly speaking, loosely speaking, don't really know how to price gold because all-time highs are uncharted territory. That actually brings me to this post here where I talk about buying low and selling high. This is the most common thing you hear in the markets with, how to get rich or how to make money in the markets, but it's actually much easier to buy high and sell higher. If you think about gold, the most recent example I've just been going through, if you did buy on these breakouts here, it is much easier to hold into a trending market. Most people go fishing for something cheap and they can just end up buying all the way down thinking it's cheap, and chances are they'll get capitulated out of their position once they're showing a loss and not actually holding long enough to realize the gains. So buying high and selling higher is a much easier game to play. I'll get to Bitcoin really soon on the higher and lower term timeframes, but we'll take a quick look at the S&P 500, which is still stalling beneath the 50% level at 5,500 points. What we want to be seeing here for a stronger market is price action on top of our trend line and on top of our halfway point. When we can see that take place, I'll be getting much more confident of a major correction bottom and that we'll be seeing new all-time highs sooner rather than later. Anything up into the zone still has a very high risk of failure, and we are seeing those signs of failure at the moment, at least in the short term. But as long as we can hold on top of around 5,000 to 5,200 points, this is still a solid looking position for the S&P 500 because we did see signs of exhaustion to the south side and also buy a step in on the 50% level, the macro 50% level at 5,830 points. We covered this for you at the time as the market started to bounce away from that level, how it's a high probability area to be expecting buying to come into the market. So for now, we are still seeing the effects of that play out on the higher term timeframes with that major support. We just want to see where the dust settles after this big whipsawing market action. The US dollar on the weekly time frame, that's what we're looking at here, is still finding support right where we'd expect it to find support. We had that sell-off in July of 2023. We've come down to approach it on this situation. Here in September, and just again most recently in last week's session, and we did pierce it and put in the lowest close in the last 3 years, but we are still seeing support act as support. We have an abnormal move, we have abnormal volume, and we do know that this can pause the trend, and in this case here we've been trending south, so it may very well pause the downtrend. It's most certainly doing it over the last few days, but whether or not it leads to a higher time frame pause or not does remain to be seen, but we do have to continue to respect the support, so just keep that in mind. Failure to get back on top of around 100.5 would be showing a very bearish signal. We come back to retest from the south side and then start to see a continuation lower. Expect some more acceleration to the south side for the US dollar, but once again we just have to continue to watch that support zone which is currently in play. Bitcoin on the weekly time frame continues to do its thing, still holding on top of the major 50% level and major trend line. The price point to be watching there is around $82,000, which is our trend line, or 79,500 being the macro 50% level. Anything on top of this level here is still more likely some reaccumulation taking place. We have seen the weekly swing direction change from down to up, but what I don't like about that is that it did take 8 consecutive bars to get there. Typically, I'd like to see a bit of a reversal take place before breaching levels, and by that I mean I'd like to see a few up days, then a correction, and then a continuation. What we've seen is a bit of an exhaust move to the north side where we had 8 consecutive bars up. This actually set up one of my favorite sell signals to go short in the market, because when you see 7 bars or more in a single swing direction, it can lead to a reversal, and sometimes a large reversal. We are seeing these short-term effects of that play out. Whether or not it develops into something more, of course, remains to be seen, but we are heading into a holiday period, one of the quietest times usually in the whole trading year or the whole year overall, being the Easter long weekend. So I'm just taking that for what it is, because often you can see volatility really dry up, followed by a few fake moves until the new week, next week, kicks off and we start to see some more genuine moves. So do keep that in mind. We are heading into a potentially very quiet period where typical trading signals may not be as clean. Now, we have seen a break of the daily downtrend. That took place all the way back on Saturday's bar, but we are still down on the 2-bar and 3-bar time frames. If you are wondering what I'm referencing here, this is the white overlay that gives us the trends. It gives me basically all of my trading signals. This is also the TIA again swing indicator. I'll leave a tutorial video for it at the end of this video, so do stay tuned for that one there. But just to take a step back to the weekly time frame, holding on top of around 80,000 bucks, just for round numbers, is still setting up for some higher prices. If we start to see some price action beneath that halfway point, by the way of some closes and lower highs, then these lows at 74.5 are in danger, and we're likely coming back to retest some higher term time frame support zones at around $72,000. Back to the daily time frame, where we've already covered a fair bit of ground, but the market's just stuck within a range. We have the peaks around $88,500 to $89,000 and the troughs around 75,000 bucks. Everything within this range is just a bit of a mess, so I am expecting more choppy market action until we see something decisive on the north side or the south side of that ceiling and also the floor. The market is also within a tighter range as well, with the ceiling being around 86.5 and the floor being around 82.5. So the volatility and volume are just continuing to drop off. So if you are looking to get a little bit closer to the market, look out for some short-term close and higher lows above around 86.5 or beneath around $82,000. On the 4-hour time frame, you can see a little bit of indecision coming into the market with some broadening tops and now broadening bottoms. This is also a common pattern which leads to some whipsaw market action with some false breaks, which can be both in the north side and also south side. So if you are looking for that little bit extra confirmation, then look out for some higher lows above the range or lower highs beneath the range, because they are just higher probability areas to be expecting a continuation in that direction. A major red flag for Bitcoin is seeing a breakdown beneath around $81,500, followed by a failure to get back on top of that level. That is the earliest warning sign I'm tracking, which would lead to a retest of the lows and potentially even a breakthrough. So do keep that in mind in terms of some higher time frame breakdowns. But overall, the market seems to just be getting a little bit quiet into the holiday period. Perhaps we'll get another little burst of energy before